Hi, this is Andy Hoffman, Media Director of Miles Franklin Precious Metals, in our 25th year of business. It's midday, Thursday, August 28th, and today's audio blog is titled Almost There. And you can imagine what I'm talking about given the very dire state of the global financial condition. Today's article, to be published shortly, is titled Ominous Beyond Words, following yesterday's Of Madness and Manipulation. Combined, these articles describe what can only be described as the greatest economic dislocation of all time, which shortly, perhaps very shortly, will catalyze the most cataclysmic financial collapse in recorded history. There will be few survivors, and still fewer in a position to prosper. However, for the precious few smart enough to prepare beforehand by purchasing physical gold and silver, and otherwise considering how their lives might be impacted by the worst case scenario, the odds of bridging the gap from chaos to a new, better world will be exponentially higher. To that end, today's audio blog title of Almost There emanates from my all-time favorite movie, Star Wars, as the Rebel Alliance attempt to destroy the all-powerful Death Star. In the final moments, nearly all appears lost, but when Luke Skywalker miraculously finishes the job, a small contingent of freedom fighters live to fight another day, while tens of thousands' hopes are instantaneously silenced. Unfortunately, the real world is not about good versus evil, but more ominously, the financial survival of one's kith and kin. To that end, it's difficult to recall having had such a negative outlook in my entire lifetime. Its negative force flowed through my fingers while writing this morning, as watching global interest rates plunge to the hopelessly inept Fed's dismay, I realized that we truly have reached the terminal phase of history's largest Ponzi scheme. No one will be spared by its wrath, and for those that haven't prepared, total economic devastation won't be the exception but the rule. We have long discussed the evil tripod of deception the powers that be have resorted to kick the can that last mile, which right now appears to be shattering. To wit, the manipulation leg of pretending economies are recovering and finances improving through outright lies is long dead, as with each passing day, more and more global denizens are falling victim to the collapsing economy and exploding cost of living that 4 decades of unfettered money printing have caused. As for the market manipulation leg, it may be alive and well in the stock market, where not only did we recently learn that central banks have surreptitiously acquired half the world's equity capitalization, but renegades like the Bank of Japan are actually doing so overtly. However, the far larger and far more important sovereign bond market is another story entirely. In essence, where the game is being lost, despite the power that be's ownership of Death Star-like financial resources, otherwise known as printing presses. Using simple math, Japan's population is a decade older than the rest of the world, which is why its fiat currency engendered bubbles crashed a decade earlier, at which point its economy was permanently crippled by a demographic hell that worsens with each passing day. Its horrific but all too predictable response of unfettered money printing has yielded 250% debt to GDP, a dead and buried economy, and putting the icing on the cake, a plunging savings rate as its citizens grow older. This is the route all fiat currency utilizing nations have always taken, and now that the US and European demographics are headed into Japan-like territory, there is no other alternative than the same exponential money printing. Only this time around, the world is already at record high debt levels, with a cumulative cost of living many times higher than when Japan embarked on its two lost decades in the 1990s. 4 months ago, we penned perhaps our most important article ever when we wrote the most damning proof yet of QE failure. In other words, we surmised, the entire world would start to realize the inevitability of QE to infinity, and thus buy sovereign bonds until rates approach zero, knowing full well that massively indebted nations and the central banks themselves could only prevent instantaneous implosions by exponential Ponzi-like liquidity increases. Moreover, money managers, institutions, and sovereign wealth funds alike are all identical in nature, in that so long as they're long markets, it's excusable to lose your shirt. Conversely, the cardinal sin of money management is being short and wrong, or God forbid, long the taboo precious metals and wrong. Such is the defining characteristic of bubbles, and thus why sovereign bonds, ironically the world's most insolvent, overvalued assets, are the most crowded and suicidal trade of all time. The Yellen put, Abenomics, Draghi's whatever it takes pronouncement, which will be put to the test at Thursday's ECB meeting, and self-explanatory actions from everyone from the ultra-profligate BOE to the supposedly conservative Swiss National Bank, which inexplicably pegged the franc to the dying euro in 2011, tell the story better than any blog can, which is that all governments are committed to the same fiat hyperinflation that the previous 600 instances fell victim to, and the entire global financial community is being forced to embrace it, like zombies in search of fresh blood. To that end, German bond yields are now negative out to 3-year maturities. In other words, earning less interest than inert gold and silver bars, while its benchmark 10-year bond rate has fallen below 0.9%. That the Japanese government bond market, in its more advanced state of decay, has not only seen its 10-year yield fall below 0.5% amidst the most rapid monetary expansion any first world nation has ever embarked on, but it barely trades anymore, given total Bank of Japan commandeering. Some of the world's ugliest pigs, from France to Spain to Italy, sporting imploding economies, exploding unemployment, and burgeoning political turmoil, have seen their bond yields fall to record low levels. Whilst the Fed, tapering and all, has watched the benchmark 10-year Treasury yield collapse to nearly 2.3% this morning, whilst practically begging the world to believe that our supposed 4% GDP growth is indicative of a self-sustaining recovery that will enable them to exit their $4.5 trillion balance sheet and raise rates to, quote, normalized levels. LOL, with an $18 trillion national debt, rising at $1 trillion annually, and excluding $5 trillion of off-balance sheet liabilities, let alone, who knows, $200 billion of unfunded liabilities, each 1% increase in interest rates adds roughly $200 billion to national debt service costs, which in and of itself is crippling but utterly devastating when federal revenues are drying up due to the reality of GDP growth closer to negative 4%. Pretty soon, the 10-year yield will plunge below its pre-taper levels of 1.5% en route to the same zero-bound or negative level that essentially all insolvent Western nations are on a crash course with. But never forget, for those of you considering buying such bonds, that when hyperinflation inevitably arrives and ends the party, history's largest fixed income bubble will burst in an instant. And trust us, there won't be any physical gold and silver around to save you. Everywhere one looks, 7 signs of political, economic, and social madness are drowning out the dominant human rationality gene, which sadly has occurred before every major human tragedy in recorded history. We can only hope you too see how fast things are deteriorating and subsequently take immediate action to protect yourself from what's coming. Perhaps it will be something more favorable than the worst case scenario, but even if not, the world as we have known it is about to change for the worse, with hundreds of millions, if not billions of people standing directly in the line of fire. Consequently, we cannot be more vehement in our belief that this is your last chance at financial survival. And for those taking the initiative to protect yourselves with physical precious metals, we hope you'll call Miles Franklin at 800-822-8080 and give us a chance to earn your business. Don't forget, we publish, in my view, the industry's best daily economic and precious metals newsletter, and we do it for free. Between myself, David Scheckman, and Bill Holter, you will learn more about what's really going on in the world than anywhere else I can comprehend. Not to mention the 3 to 5 podcasts we tape each week, which are also available for free in real time at milesfranklin.com. As for Miles Franklin itself, our 25 years of experience should comfort you that not only will our prices be competitive, but our service the industry's best. Moreover, we operate what I believe to be the industry's best international storage program with Brink Security in Montreal, Canada, which, by the way, in the next week or two, we hope we will be able to publish some exciting new developments about. And as always, you can contact me with any questions you might have at ahoffman@milesfranklin.com. Thanks and have a great weekend.